What is up, everybody? We are back with another edition of YouTube Live, Everything Phoenix style. If you are interested at all in anything, or I should say everything Phoenix, this is the show for you. We're going to spend the next, 15 to maybe 30 minutes, as much as that, going over what's happening today in the Phoenix area from a housing standpoint as well as a development standpoint, mortgage rates, how they play a role, and is there hope? Is there a hope for the Phoenix housing market? It's interesting, guys, because there's a lot moving right now, and there's a lot of hope in general in the economic outlook because of the comments from our lovely friend Jerome Powell with the Fed chair and what he said in Jackson Hole, Wyoming at their retreat last week. And so the markets reacted favorably to that, allowing for people to actually get real excited about some hope coming here in the next month because the Fed meets next September, and the consensus is there will be a rate drop. The question becomes: is it 25 basis points or 50 basis points? And let's go for that 50 basis points. There's a lot of good things that could happen from the rates coming down a little bit. And hopefully that will take place. But let's dive in here and see what kind of hope are we talking about? What does the average homeowner in Arizona, how does that hope kind of trickle down to them when it comes to rates dropping and the housing market supply demand issues? Okay, so guys, my name's Kelly Cook. I run the channel here, Everything Phoenix Live on YouTube. And if you don't mind just having a two-way conversation with me, that would be great. I would love to chat with you if you have any questions at all. If you're thinking it, someone else probably is too. We have a lot of people who hop in here and even more who watch the replay. So comment below if you have any questions or just interact live with me here. If anything, just let me know you're there. Let me know where you're watching from. So, it's not as lonely talking to me on this webcam to myself. All right. So anyways, guys, we're going to jump in here and share my screen because I can talk regardless. So hopefully what I have to say resonates and provides value. At the end of the day, time is our most important commodity. And I want to make sure the time I allot on this channel for you makes sense. All right, here we go, guys. You can see the Crawford report, 99.5. Last week, I know this to be factual. Last week, it was at 99. Okay, 99.9, I believe. So now it's at 99.5. It's moved just a little bit down again for the third, maybe fourth straight week. It is continuing to slide. Now, we are in a balanced market. What's interesting is the Phoenix market is resilient. And what's interesting is it's been sliding and sliding, but yet it's not going into a buyer's market overall. Now, we'll see here that when it comes to the different areas of town, you can see it's a buyer's market right here. Goodyear, Surprise, Queen Creek, Maricopa, and Buckeye are all in a buyer's market, and Buckeye is struggling when it comes to that. Now, if you're a buyer, hello, right? But if you're not, it's struggling. And if you're a seller, it's not great. But you do have several markets that are balanced here with Peoria, Cave Creek, Tempe. And that's it. Everything else is a seller's market still, guys. And you have some more green on the board. Okay. So if you go back over here, you can see that the demand index is actually 73.3, still pretty low. Supply index is also low. Now that's why it's green, because it's supply. Now, if supply was and it had an incredible amount of supply in the market, it'd be in the red, right? And that's what keeps it somewhat balanced at this time, even though it may not feel like that all the time. So it's interesting what's happening, guys, but the Phoenix market is resilient. Now let's look at the market dashboard here. This is always a good one because it talks about the monthly averages and on a price per square foot basis, which a lot of us go by. We're on our consumer websites, our Redfins, our Zillows of choice, whatever they may be, Realtor.com. And we look at, that property looks interesting. What's the price per square foot? Well, that's probably the biggest indicator that people start with, and then there's a lot to drill down from there. So we'll do the same. We'll start right here. You can see the monthly average annual sales price per square foot is at $283. Annual average at $292. So why is this one lower? What is that telling us? That's telling us that the market is obviously declining or softening still to this day, at least as of the last monthly average. The annual appreciation is at negative 0.5% when it comes to the average price per square foot. Okay, when it comes to the change in the annual price per square foot, it's actually up 5.3, but monthly is 0.5 because the last couple months have been a little rough, right? Now, granted, it usually is no matter what in Phoenix because of the seasonal aspect, but it's been a little rough here recently because the weather's so warm and everyone's leaving for vacation. Well, now schools are back in session and normality is starting to set back in, right? Where you have people doing their regular routines. And so now you're starting to see the market starting to turn and maybe get just a little bit better here coming down the pike. I know these numbers don't show it on a monthly basis, but let me jump in here and show you kind of what I'm talking about. So I'm going to share my screen again, and we're going to go over here where you see this chart. Now, here are the numbers of permits. This is a positive thing for the marketplace. Now, I guess if you're a buyer and you want this thing to crash, this is not going to be good. But here are the numbers, okay? This is interesting. 2024 has seen a rebound in the number of single-family permits issued in Maricopa and Pinal counties, okay? So far, until the end of July, we have 18,498 single-family units, which is up more than 40% from the same period last year. However, it's not quite enough to the booming levels of 21 and 22 when we had 21,000 and 18,000 or 19,000 respectively, okay? The resale market has been much weaker than the new home market, and year-to-date sales closing volumes are down, which is interesting. Now, look at this. Home builders are clearly optimistic about the market, especially given the Federal Reserve positioning on reduced interest rates. Many of the publicly traded developers saw their stock prices hit all-time highs just this past week. Okay? Now, you combine that with the news from Jerome Powell with the Federal Reserve, and that's interesting, right? Here you go. Permits are up 39% in Maricopa County and 43% in Pinal. They're almost up 38% for Arizona's 13 other counties as well. And you can see the different areas of the numbers, right? Pretty interesting. There he is. What's up, Jason, my man? Hey, dude, thanks for always saying something, right? I appreciate you, dude. Thanks for listening. Even if it's only for 30 seconds, I appreciate it, right? But I'm going to drop some more knowledge here, Jason, so stay tuned, right? Stay on here. Thanks, brother, for the support. All right. So, okay, guys, so here we go. There's the different areas. Now, this is interesting. Santan Valley, which is in the southeast corner of the greater Phoenix area, they are trying to incorporate, okay? They have extremely large number of new homes going into locations that are not managed by a city or a town. That's what being unincorporated or unincorporated means, right? Just the county administration. There is now a renewed effort to incorporate, and vote is scheduled for later this year to determine if the effort can proceed. Okay, Florence is also growing fast, which is just south of Santan Valley, and is now receiving more permits than Gilbert and threatening to overtake Scottsdale, guys. That's where the growth is going, down in the southeast valley on the outskirts, okay? Interesting, right? And now you have a lot of building permits coming up, and obviously there's land out there and a ton of land to be had, and builders are building because we are undersupplied. Now, here's the one thing I want to show you guys, all right? The change is still painfully slow, but it is real. The trend has reversed, but is yet to gather any significant momentum. The average change in CMI, the Crawford Market Index, over the past month, is 0.7 in the positive direction. Our first positive change since May 23rd. Last week, we're still down 0.1 of a percentage point. So what's that mean? Here you go. The market is starting to improve for sellers overall, and I hope buyers took good advantage of their opportunity to negotiate harder over the last 3 months. Okay. So now, guys, you just saw the unbiased aspect of what data is showing in real time, not the Case-Shiller index or any of these other indexes on a national level, or even some of those on the local level that lag 1, 2, or 3 months behind. Crawford Report does not. That's why we pay money to subscribe, to give you that information so it's in real time as much as possible on a daily basis, really. Okay. So what they're saying is that the market's showing signs now of starting to improve. Supply-demand ratios are starting to get a little bit better, going against each other. And now they're saying that because this typically happens to an extent anyway in the summer months in Phoenix, we hope the buyers took advantage and they negotiated really hard and got their deals over the past 3 months, because starting now, there's a little chink in the armor and there's a little bit of hope that's coming to the Phoenix market due to all of these changes, supply demand, really. And when you talk about the Federal Reserve talking about and hinting to a price cut, a rate cut come September, maybe as much as a half a point, that's huge, guys. That's huge. If you look at the the history of how the Federal Reserve usually plays this, whether it goes up or down, they typically don't cut or raise more than 25 basis points at a time. But we all know when they went up here over the last couple of years, they did several hikes that were above 25 basis points. But traditionally speaking, that's not the norm. So if they went a half point, that would be actually significant for the marketplace and the housing market in general. So that will get some people off the fence. There's no question about that, in my humble opinion. We'll wait and see. Okay, and we'll track it for you. All right. Now, let's go back to the Crawford report because I want to talk about the rental market really quick. All right. There's a graph. I don't need to zoom in really tight on this, but that's the graph of the rental market. And what's interesting is you see that red line right here. It's staying fairly flat. So that means since 2022, when the market started to flatten out on the sales side, right? People buying and selling, you now saw the rental market do the same, which is interesting, right? And so now it stayed fairly flat, and to the point where last month in July, it was at $1.38 on average a foot. Well, the red line's kind of showing an average of $1.35. Now, you're starting to see more and more rental units on the market, right? Especially a lot of these multifamily big projects, these condos that are starting to sit as they start to be delivered to the marketplace, and there's not the bodies to fill it, especially on the higher end, the luxury condos. Guys, is it just me, or is it just me that sees all of these multifamily units out there in Scottsdale, especially, and Phoenix in general, and they're all luxury? Is anybody building apartments, new apartments, or condos for that matter, that are non-luxurious? Right? Because all I'm seeing is luxury apartments coming soon, luxury condos coming soon. I mean, can we get some apartments that are not luxury? Now, let's be clear. Some of these are not luxury, but they're calling them luxury. That's my point of this, right? It's joke. It's marketing, right? And so don't be fooled by that. But the prices are silly. Now, I think some of these developers are going to have to start coming down and get more realistic on these rental prices because they're starting to sit and have a glutton of supply hitting the market. And I think that red line, when it comes to the rental average price per square foot, is going to probably dip a little bit as we head towards the end of this year. My prediction. We'll see if I'm right. We'll circle back on that. Now let's jump over here to listing success rate. I want to hit on a couple things when it comes to where's the market and is there hope, right? Is there a chink in the armor that's going to be in the right direction? Now, again, we're not sitting in a bad situation right now. We're at 99.5. We're in a balanced market. We're not in some dire buyer's market by any stretch of the imagination in Phoenix. But where is it going to go? Well, right now, all indications are going towards a reversal of the trend for the past 3 months, and we're going to see the market start to actually improve a little bit when it comes to appreciation and demand, and still an imbalance of supply and demand. Right now is a balance. It's going to be more of an imbalance probably as we head to the end of the year to an extent. We'll see. But you start seeing the listing success rate, and this is not good, right? This is a lagging indicator to an extent, but right here, 69% is August. We are in August still, and right now we're at 69%. Where last month in July, or May, excuse me, was 78. July was 73%. So we're trending down in the wrong direction. What does this mean? Guys, this means that the listings that are out there on the marketplace are, not as many of them are selling. They're having to cancel. Maybe they rent them out, whatever it is. So that's indicated that the market is softening, which it is. But the question is it going to turn a little bit? And if it does, right, and you're a buyer, you probably want to act sooner than later. Now, does this mean that if you wait a little while, it's going to be all lost? No, I'm not. I'm never going to, guys, I'm not Chicken Little. I never will be. I'm never going to say it's doom and gloom. You better act now. No, not at all. That's not my style. I want you to decide based upon the data. And the data is on this chart is showing you that listings are not selling at the same clip as they have been in the past. We know that. All right. But what if we go to the next graph? Because how do you know, Kelly, that the market's starting to possibly improve? Well, we saw the data on the home building permits. We saw the data on the Crawford Market Index that the demand is starting to pick up a little bit. And for the first time in 3 months, it actually went up in terms of the index a little bit. And then you look over here. I got several slides on this. Foreclosures, trustee sales, late payments. Are there a lot of people starting to miss their payment? No. They're not, guys. Look at this. In fact, it curtailed here in Q2 in 2024. Okay. You can see it right here that it's 20. There's 21 notices overall plus 14 that reverted to the beneficiary. So that's 14 plus 21. I'm a football guy. That means 35. Okay, I can do that math because that's, those are touchdown scores, right? So that's 35 total, and it went down. Okay, now look back here. Conversely, in 2014 quarter one, you had 417 that reverted back to the beneficiary, and you had 2013 that sold to a third party, an investor, et cetera, et cetera. So not a lot of foreclosures from that standpoint, from a trustee sale standpoint. Now you have notices. Notices, here you go, still very low. 343 in July, 343. Likewise, at the peak here, there were 10,558 guys in March of 09. That's a lot of foreclosures, right? And then it kind of went down. But I mean, we're still big numbers here, 4,300 in April 2012 compared to today, again, 343. Now let's do some more on this foreclosure stuff. I'm going to pound this home, guys. Here's 2024. Okay. Last reading here, we had 955 that are foreclosures that are pending compared to where we were. I mean, it's just not even close. Now, if you go to 2009, okay, look at the graphs compared to that. It's so far up there that the graphs that were the last 5 years are just compressed down to the being, tiny, right? So 2010, 11, and you can see it's way up there compared to, and then obviously in 2012 it started to come down, but we're nothing close to where we were. And so that is the point I'm trying to make here, that guys, even though we've had a slow summer, which we have had in the Phoenix housing market, there is hope. There's light at the end of the rainbow, right? Because foreclosures are not continuing to increase. People are just not acting right now, meaning economically, people still are able to afford their housing payments at this time. Okay. Here's another one. And the last one I'll share with you on foreclosures. You have this one pending right here. And you can see right here, again, back in 09, it was just a ton of notices of trustee sale. And then, of course, a lot of trustee sales that followed. Now, back here, you can see there's a lot of notices compared to back then. There was nothing but 325 in July. And then in July, there were actually 31 that actually sold at the trustee sale. They actually acted upon. Most people, like 300 of them, actually got their act together and made up their payments, somehow did a settlement plan with their bank, whatever it may be. Okay. So, guys, it is not a distressed market at all in the Phoenix real estate. So what do you guys think? The data, when you talk about the demand and supply balancing and where that's going, that's the Crawford Market Index. And that index has increased for the first time in the last 3 months. And then you have foreclosures. Well, there's not a lot of people that actually are losing their house because they can't afford to pay their mortgage. So people still have money or the viability financially to at least afford a place to live at this time. What if the rates come down now? What if they come down a half point? Will some of these people that are just sitting on their hands act? Well, it's possible. Now, if you look over here, I'm going to share my screen because this article right here by Yahoo Finance is interesting because it talks about that U.S. consumers got $600 billion boost from locked-in mortgages. Okay, what does that mean? Around 3 in 4 mortgage holders have a rate below 5%. All right. So 3 of 4, if they're below 5%, if it goes down to the Fed drops the rates and say the 30-year fix drops to around 6, will they act? Maybe. Some will. But in general, maybe not a lot. But the ones that are around 5 or 5 1/4, if they don't like the house they're in, I think they will act. I really do. I think they will downsize, upsize, whatever they need to do to get into the house they want to be in, even though the rate goes from 5.25 to 6 or 5.25 to 5 7/8. Okay. And that's what we hope that rates get to. If you look at this right here, you can see on the Mortgage News Daily that the 30-year fix today sits at 6.43%. We're not that far from 6. Now, I know, and I'm going to say it again, that the mortgage rates, they follow the 10-year treasury, okay? The 10-year note. They don't follow the federal funds rate that the Federal Reserve sets for overnight borrowing between banks, okay? But there is an indirect correlation there. So if the Fed comes out in September and says a half point drop in the federal funds rate, is it possible that the 30-year fixed drops down to around 6%? It is. Guaranteed? No, because they're not directly correlated. But there is a high probability it gets down around 6%. Potentially, guys, do I dare say there's a 5 in front of that? 5 7/8, 5 3/4. Whoo! Look out. People will jump off the fence. People will jump off the fence, guys. I'm telling you. So if you're looking to buy, you still have a great opportunity, guys, to buy at this point. And you will, of course, if the Fed reduces a half point, you'll still have a good opportunity to buy. There's plenty to choose from out there. You just may lose a smidge of leverage. That's all. But you'll still have some leverage because it's not a super high seller's market, and it won't be anytime soon. Let's be clear on that. Okay. So now you go over to Mortgage News Daily. There's this article here that's interesting because it talks about mortgage rates fall to 2 weeks low after a Fed's friendly message. Now, what this Fed friendly message is right here is Jerome Powell's speech he gave at the Jackson Hole conference when he talked about there definitely being a rate of a quarter point and potentially as high. Now, he didn't say anything concrete. He just hinted at a few things, and the market reacts, right? The market did really well on Friday for the most part, okay? So everyone's kind of thinking a half point, but no one's guaranteeing that or locking that in. But they are pretty much locking in the cut of 25 basis points. Cool? All right. Now, there's some interesting things about the residential real estate and the commercial real estate here in the Phoenix area. We talked about the data. Now let's talk about what's happening in some of those areas, okay? We'll touch these really quick, and then we'll get you out of here. How about that, right? Land prices are soaring in the Valley's luxury market. Here's where values are headed, okay? So, guys, this talks about how resilient the luxury home market is in the Phoenix area. PV, Scottsdale, Cave Creek, and these other areas that have more higher prices. But land drives it. And land prices are through the roof in some of the Valley's luxury residential markets, okay? Now, here's the interesting part. Look at this right here. Paradise Valley and the surrounding market area of Scottsdale and Arcadia is the number 2 destination for the ultra-wealthy migration pattern, second only to South Florida and Miami. Number 2, guys. That's awesome if you want to play in that luxury home market, okay? Paradise Valley has become the national and international magnet for home buyers. Okay. In 2023, vacant lots in PV, size smaller than 2.5 acres, sold for an average of $3.818 million compared to $1.5 million in 2020. So 4 years later, I should say 3, because this is the 2023 stats. The prices doubled for land. Isn't that crazy? Okay. The number of days on the market for in 2023 for those lots was 113 compared to 167 days in 2020. They're selling faster. Guys, here's a 27-acre parcel, I believe, right here, right in the heart of PV. I mean, just prime real estate, okay? And that thing just sold, that parcel sold for $42 million. Parcel of land in PV, 27 acres. There you go. They don't have too many of those left, if any at all, actually. Okay, so someone bought it up for $42 million. Good for them, and they will do well no matter what they decide to do. And then you come down here, and they talk more and more about what's happening. But guys, here's the key. The luxury and custom home market is stable. And no matter what the rates do in the Federal Reserve, this market's not going to move a whole lot, okay? So the 30-year fix is lingering around 6.5, and that doesn't matter a whole lot to people who are buying these types of properties. I think we all kind of know that. Let's move on. Home prices are surging faster than incomes. Here's where it's worst, okay? So, guys, we're not going to go through this whole article, but, the Northeast, Boston, New York City, you can kind of get an idea. San Francisco, those are the places where home prices continue to surge, and incomes do not even come close to matching it. Now, what's interesting is even in a place like Tucson, Arizona right here, the median income grew 27%, which is awesome. But the average monthly mortgage payment more than doubled, rising 126%. Now, that's not all on the appreciation of home prices. A lot of it has to do with what? The main culprit, interest rates. So again, we're talking about the domino effect that will happen, guys, if the Fed drops the rates and drops them significantly, like a 50 basis points drop. That will help people who are struggling to make those payments, or maybe they're making payments fine with their current mortgage because it's a 30-year fixed payment, but they want something different. They just can't afford it now because where rates currently stand. This is going to help. And if that will occur, this will unlock more inventory, which is going to be huge for the real estate industry. All right. Couple things, guys. North Scottsdale's Cavasan East. Hope I pronounced that correctly. I think I did, right? Cavasan East, now fully leased, plus more Valley deals. No, we're not going to go through all those. I want to show you a picture. This real estate here is prime. This is Scottsdale Road right here. And this is Hayden. And then you have Pima right over here. And then you have the 101 loop right here in the picture. This whole campus, which is anchored by Nationwide Insurance, is now 100% leased, guys. And this is not cheap real estate. So this gives you the idea of the viability and the resiliency of the local Phoenix economy when it comes to the job market, guys. It's crazy. It's 1.8 million square feet that is Class A office space all the way around, and it's 100% leased. It's crazy on 135 acres. So that is really good. Again, just really good indicators of where the local economy is. Okay. Distress test. Now, while you have that going on in the office space, okay, you have a distress test, which is interesting because Valley apartment projects are facing variable levels of strain because they need cash infusions, and no one's willing to give cash infusions if they may not have longer term viability to keep up with their multifamily project. And this is happening across America, not just Phoenix, but there are 34 loans for multifamily properties that are currently on the CMBS watch list, according to research conducted by property management software company Yardi Systems, which means they could be in trouble potentially. But guys, even a movement on the rate will be huge because a lot of these places have bridge loans or locked in loans that are temporary with a small balloon window. And when they come due, the bank won't give them just a reduction of rate because they don't have to, because the Fed has the rates up here. The 10-year rates are up here. This SOFR and these overnight borrowing mechanisms they use to establish rates for these larger term multifamily tenant office spaces, they are non-forgiving, meaning they don't care to an extent, right? To work with you, they don't have to. But if the rates come down and the banks can get lower rates to borrow amongst themselves, they'll give it to the investors, and therefore, hopefully, some of these projects will be saved from potential foreclosure. Okay, that's the point. But there of all these different projects right here throughout America, throughout Phoenix, are which ones are on the potential chopping block in the near future, which hopefully they won't be, but we'll see. Hopefully the rates play a big role in that. Glendale voters have final say on $20 minimum wage measure. What? $20? This is for event and hotel workers, okay, in the West Valley city of Glendale. It hasn't passed yet. They're going through the legal process, but man, that'll be interesting, right? Again, inflation, right? Inflation. This is what we're trying to solve for right now. And too much money chasing too little goods is what causes inflation. Also, if you increase what is demanded, someone is paid on a minimum wage, then obviously that cost will be passed on to the business owner. Business owner has two options, basically, right? At the end of the day, to increase their prices to the consuming public, or go out of business. And so what this does is raises prices. It will raise prices. And I'm not going to go diatribe. This is just economy. This is not political at all, guys. I'm not going there whatsoever. But from an economic standpoint, maybe Glendale can afford this. Maybe they can't because they have some things going on with their city, their municipality, and so on and so forth. But so we'll see what happens. I don't know. It'll be good for those workers. But if everything else goes up with it, then I guess it'll be a wash. I don't know. So GPEC, guys, this is the Greater Phoenix Economic Council, which is instrumental in our local Phoenix economy. This is awesome. They helped dozens of businesses set up shop in Arizona in the past year, guys. And by the way, look at this. This is the headline right here. Economic Development Organization cites more than 200 business projects in the pipeline. That is incredible for our economy, okay? It's wild. Now look at this. The Greater Phoenix Economic Council helped 49 major companies expand in the Phoenix market during the last fiscal year, which runs from July 23 to June 24. Guys, 49 major companies. That is incredible. This win represented about $3 billion in capital investment and 7,400 jobs created with an average salary. Here you go. Wait for it. Of $73,000. This is incredible. These companies were part of a larger $50 billion in capital investment. And just a lot of good things that the GPEC is doing for local Phoenix economy, guys. And it will domino effect. If people are being paid a good amount of money, they can afford to live good, and therefore they can afford their mortgage payments, and therefore houses will sell. It all goes that way, right? So this is all good stuff, guys. And the future, like I always say all the time, in local Phoenix economy is bright, very bright, okay? A couple things here I want to talk about, and we'll be done, guys. Home Run Dugout takes big swing in growing entertainment corridor near Talking Stick. Guys, now we all know of Talking Stick, right? Okay, but this one here is cool, right? This one here is cool. Home Run Dugout takes big swing in this new concept, okay? So this is a concept that's going to be actually in the area where the new Hard Rock Reverb Hotel is. Okay, it's called the Sydney development, right by Top Golf and the casino, Casino Arizona, which is awesome. And so you have this new concept called Home Run Dugout, which offers soft toss baseball hitting cages or batting cages. And they're opening their first location outside of Texas, near Loop 101 and Talking Stick in Salt River, Pima, Maricopa Land. Guys, this is incredible. Okay, why? Because this area already has so much to do. You have the boardwalk, which consists of a lot of things. You're talking the aquarium, the butterfly wonderland, spring training fields, and all the baseball activities around that. You have iFly, indoor skydiving. You have Tiger Woods Pop Stroke, which is the incredible outdoor mini golf experience. Now you have this Home Run Dugout that's coming, which is going to be similar to like a Top Golf experience, but for baseball instead of golf, where you can have food and drinks and parties and events. Incredible, guys. This area is off the charts or off the chains. One of the two, right? I mean, is off the chains still a thing that people say? Because if it is, this is off the chains. All right. So I mean, this is right here in Central Scottsdale, and you have the Hard Rock Reverb Hotel coming right here too as well, which is going to be a little a little more for those mid-level professionals, not the older people, not the super young people. They can stay down in Old Town Scottsdale, but that Central Scottsdale flavor right here, the Arizona Boardwalk, is going to be awesome. Okay, so that's that. And here's a little rendering of it. We can see where the Home Run Dugout is going to somewhat look like. Okay, so pretty cool. A lot of things going on for that. And to wrap this up here, guys, I want to be transparent on this show, Everything Phoenix, because not everything is always going to be great. And guys, this is one thing. This is a company that made news because they're leaving Scottsdale and they're going to relocate in St. Louis. They are a manufacturing company that we will lose about 1,000 employees. Well, excuse me, 1,000 employees nationwide. They have, I'm not sure how many are in Scottsdale. I'm not sure if the article said, but they will lose those employees here in Scottsdale. They're relocating to St. Louis. They used to be in St. Louis, and the main reason for the relocation is because their lease is up, and they are a manufacturing company that has distributions primarily in the Midwest and East Coast. And so, actually being in Scottsdale for whatever reason was a little more of a hardship for their employees because of travel time and extra days traveling, et cetera, to do their job, as opposed to if they were located in the Midwest. But the point is, guys, I want to bring you everything Phoenix, not just the good news. There's always some not so good news happening as well. And I guess that would be one of them, because as many jobs as we're getting, we're also losing some too. All right. Restaurants at redeveloped Paradise Valley Mall. We'll end on this one. Prepare to open. Guys, this is a terrible picture, but because it's construction. But guys, the amount of amazing restaurants that are going in with the Fox concepts and everything around the Paradise Valley Mall, which is done by Red Development here, guys, is incredible. The PV Mall used to be this old school mall. Guys, you know the malls that were built in the 80s and 70s that are all indoor, that were dark and dingy. Everything's inside. That got completely obliterated, knocked down, and now the new development going on there with a Lifetime Fitness Country Club, along with a Lifetime condos. It's basically a country club where you have the fitness center and condos living all in one, and you have access to both. It's amazing. Plus additional condos that will be right next to it, plus everything around there, including Costco and just a ton of restaurants. Well, Flower Child, the healthy restaurant, is going to be one of them there. So that's located right off Tatum and Cactus, right in that central Scottsdale location as well. So guys, big things happening in the Phoenix Scottsdale area on the show, but let's stay tuned to see what comes down the pike with the housing market as the market overall starts to get more and more excited with hope about what the Fed may do come September. All right, guys, thank you so much for joining us as always. And until next week, same bat time, same bat channel. Keep it classy, Phoenix.